So I'm guessing you come in similar situations to where we come in, that clients are so stressed, don't quite know what to do, and are then desperate for a specialist to be a bit like a shield between them and the entity they're not scared of, but really sort of nervous talking to.
Yeah, we're ASIC licensed and we know those grounds and we can pilot that case. Whereas when the client themselves will go to the creditor will potentially just say no or mark the default as paid. Clients also don't realize that every time you go for any type of finance, even if it's a buy now, pay later account or it's a $2,000 cash converter account or any sort of small short-term loan, that still affects your credit score by around 50 to 150 points. And we've only got 1,200 points every 5 years, which is crazy. And we need around a 650 for finance, roughly. So we've only really got 650 points to protect every 5 years. And now the credit reporting system has evolved so much that 650 also depends on if you're paying your bills on time and what you've applied for. So realistically, you've only got room for a car loan and a home loan potentially and a small credit card every 5 years for that scoring system. So what I see a lot is that clients, and again, there's no awareness, and that's why that we do these things like the podcast. I've got that ebook so we can explain that these little buy now pay later schemes and these little loans, like the little, $5,000 loans. And also every time you shop around, like if you get declined with one and you go and you try 5 times with the same lender, that's 5 inquiries.
Are there things you can do to help fix that score and help with those points?
Yeah, we do offer a free consultation, like 20 to 30-minute consultation. So I run through that credit report and I explain what's on there and what we can fix for future. I always suggest closing those buy now, pay later schemes straight away because that'll instantly lift the score by about 70 points. With the inquiries, it is changing because we are under ASIC review at the moment. But they're hard to remove because at the moment they're hard inquiries. Eventually they will go into soft inquiries that some of the lenders will be able to do like a soft inquiry, like a pre-approval stamp.
When there is ATO debt and we're in a payment plan, it's my understanding that doesn't affect a score. So once we're in a payment plan, the ATO considers that at being in a compliant position, and it doesn't come up as a score or using any points. Is that correct?
Yes, so it would be removed. There's no, it wouldn't affect the score because it's removed. There's no evidence, there wouldn't be evidence on that credit report, which is fantastic. Like I love how we can work together with like that because I've seen like before we sort of met, I had these ATO debts and I wasn't sure myself how we were going to remove these. And again, it's such an impact for finance when you've got an ATO debt of what maybe potentially, what's your average, 100 and 200K sort of default, right, that you're seeing?
So the average debt that we're
Yeah.
seeing is probably around the $800,000 mark. So the average debts are huge now. So pre-COVID, an average debt might have been 300,000-400,000, and now it's double that, which makes sense because a lot of people deferred their debt and carried that debt over. So there's a huge amount of debt out there. But I think what this is highlighting as well is clearly there's so much behind the scenes with these points and these scores that different accountants or brokers may not necessarily have such an in-depth knowledge around what you're talking about. The same with us when we're talking about solutions to get rid of the credit reporting if it's happened in relation to ATO debt. And I often talk about using a specialist because there is so many rules and laws. And I'm assuming just like us, you work in parallel with brokers and you work in parallel with accountants. And how do you work together with other specialists as well?
I think the beauty is because I do have that experience in the finance industry. So I'll chat, normally it's
Yeah.
with the broker and the three of us will work together and go, hey, right, for example, the credit score is 540. We need to get that credit score up to 700 for finance. How do we get up to 700? So potentially I wouldn't suggest to potentially remove everything if we don't need it for finance. So we sort of work together and work out what their future goal is and what that big goal is and try and get there. Because if we can fix that credit score, they've gone from, and obviously I'm not a broker, but they've gone from potentially a 10% rate, for example, down to a 6% rate. So think on an average loan, how much interest we're going to potentially save them each year.
And so if you look at it that you're doing that we're getting people into payment plans they can afford. It's the same when people have terrible payment plans and we're able to renegotiate and get a much longer payment plan with much smaller monthly payments. So by the time, and that's a perfect example of how we work together. If we renegotiate an arrangement, get quite small payment plans, that increases the cash flow. You're fixing the credit score on closing some files, closing some loans, fixing the score so they can then get finance from another lender. There's a lot of lenders that are happy to accept finance if the tax debt is in a payment plan, and I'm assuming the same when these scores are lower. So you sort of look at how that works together, and that can completely change a landscape from a client that might even be looking at finance. We've seen some up around 18%. If we can get that back down to sort of 8 or 9%, absolutely changing for that business and that particular client.